Time for a really quick market review, and of course we're doing it with the help of our global macro research and consulting firm MacroOps. So markets were pretty crazy last week, but we did see that key reversal that we were looking for. And what we wanted to happen was for the market to close above this black line right here by Friday, which is exactly what it did. And you can see there was a huge strong reversal on Thursday, and that was a good sign. So what happened here was pretty much a bear trap. And a bear trap is when you see the market go super low and then rebound up higher. So everyone who was trying to short at that point, they got blown out. So it's a trap for bearish investors, obviously. So we got that washout bear trap below the neckline, and this neckline is what we're watching, because if the market breaks this, that's when we'll move. And this neckline is the important key support that we're looking at, because if the market breaks this, then it's going to go all the way to 37.50. So that's a huge topping pattern. But if it holds, then the trend will resume. And so far it's been holding. But we're not out of the woods yet. We still got to see how price action plays out this week. I'm recording before market open on Monday, and so far it looks good, but a lot can change. But again, this reversal that we saw, that's a good sign. So there is potential that this market has bottomed, but don't hold on too strongly to that, because equities are a tough read right now. So don't be anchored to any one scenario. We've been bearish for the past 2+ months, but again, this might be the bottom. You got to constantly change with what the market is doing. And one reason we might have this bottom is because the Fed may be able to lighten up on their tightening, because with everything happening with Russia and Ukraine, that kind of gives them the backdrop and cover to run easy policy with high inflation. And that we know is very good for stocks. We don't want rates rising. Also, the S&P's price to 50-day moving average spread is at levels that often, but not always, coincide with bottoms. And also, small specs are now crowding bearish. And when everyone is getting bearish, what usually happens to the stock market? It goes higher, especially when they're positioned like that, because they could get blown out. And strong positive seasonality kicks in about another week. So those are all things that are going for this potential bottom. Short interest in the NASDAQ is at 4-year highs as well. So once again, that's telling you people are really bearish, which means the market is closer to a bottom. So the nice thing about this action in the NASDAQ is that tech has been really beat up. And what usually happens is that after a sector is beat up, its returns are great for the following period. And tech has been in a bear market for a while. A lot of popular names are down like over 60%. All the popular names you see on Reddit. So the bear market has already happened here. So one of the names we're looking at to recover is SQ, or Square. We've seen a strong monthly reversal off its lower Bollinger Band. And this is one company that we've been tracking, so it has a strong fundamental case as well. Twitter is another one that's just been crushed. Let's see, actually Square itself was down like 70%. It's nuts. Twitter has fallen almost 60 as well. Not good. But in our research, we think Twitter is going to rebound. We got a technical double bottom on the weekly combined with a massive reality perception valuation gap. And one of the reasons why we think Twitter is so valuable is for just what happened during this whole geopolitical crisis. The best information during this whole war has been on Twitter, and it's actually helped Ukrainian forces. So it really changes the game when Russia is used to having that misinformation, and that's part of what helps them win. But now you can't really have that because of something like Twitter. And Twitter is the #1 spot for this breaking information and on the ground reports from real people. So that's another one to add to your watch list. And if you want to simplify everything and play this tech rebound in the easiest and most profitable way possible, then make sure you check out our free training that will teach you our strategy. We systematize the whole thing. And like I said, tech is in for a rebound, so it's going to be a nice ride higher. So if you haven't already, make sure you check out our training. I'll put a link to it in this video and down below in the description and comments. That's it for this week's market review. I will see you again next week.